So today again is the 9th of August, and this news came out. It's an opinion news. It's 36 minutes ago, so it's quite recent. And it says, no, Bitcoin isn't entering a 2018-like bear market. A new data suggests that Bitcoin's target is 45,000 and could reach a long-term target of 65,000. So why does this person say this on his opinion? Well, we can look at this into on-chain metrics. We can look at this in funding rates. I mean, if you remember back in February 2021, the funding rate was 0.2% for Bitcoin, and Bitcoin was roughly 45,000. Now Bitcoin is at 45,000 and the funding rate is 0.02. So it's 14 times less in terms of funding rate, which is bullish because that means we have higher significant amount of growth that we can participate in and see higher prices. And of course, they then go on saying that 2018 bubble, people sold off the Bitcoin, and of course, et cetera, et cetera. And then on top of that, the world economy debt has grown considerably to nearly 300 trillion. And of course, it's talking about the stock to flow model. Right, let's move on. So this news came out from Phoenix, our affiliate partner. So their CEO is the one who wrote this, and they asked his opinion. They asked him, could DEXs see a demand boost as regulators target centralized exchanges? And his opinion was, if they regulate the crypto economy more, you would see more users come in. Now, in some ways, I do agree with what he said. And of course, I completely agree with it. You see, with regulation, it brings certainty. It stops these projects that, what do they call rug pulls? Rug pull technically means a project, let's say Project X, they create a token. And what you would see is that they provide liquidity for that token. So they use their own money. But the moment that they want to exit scam that token, the first thing they have to do is remove all the locked liquidity and then dump the entire token on everyone who's a liquidity provider other than themselves. So that is called a rug pull. And yes, in some ways, regulation does help. It prevents fake people like this on the chain from destroying cryptocurrencies. Right. So let's move on to the on-chain metrics for today. Again, if you're part of my Persian audience, you might have already seen this, but if you're part of the English audience, here is the Bitcoin miner net position. So as you can see, the Bitcoin miners are still accumulating. They're still buying up their own Bitcoin. So they're mining the Bitcoin, but instead of selling it, they're keeping it. Or some of them are repurchasing back their Bitcoin. So they might have sold it off, but now they're buying it at a loss. So what happened was that some of these miners sold their Bitcoin and then they're like, no. I made a mistake. I'm going to buy it off you, but I'm going to give you an extra $1,000 because of it. So that's exactly what's happening with the miners. So they are purchasing and accumulating more Bitcoin. Data number 2 from Glassnode. The Bitcoin balance on exchanges have been declining. So as we can see here on the bottom right, that the supply on exchanges, which is Bitcoin, has been decreasing while the price has been increasing. So that's a strong correlation that shows that supply and demand. If when there's less supply, the price increases. Data number 3, which is again from Phoenix, shows that, this was on Saturday, by the way, or no, it was Sunday. Yeah, it was Saturday. Yeah. So Saturday, Robert G. Allen went to Senate and they said, how many millionaires do you know who have become wealthy by investing in savings accounts? I rest my case. I mean, this speech for itself explains a million words. I myself have never seen anyone who has become a millionaire by putting money in the bank and just letting it grow. It does not exist. Never heard of one. And if you could find me one, that would be amazing. But you should find me one that only has £1 in his bank account. And let's see how that grows to $1 million. It will take him roughly 20,000 years, something around along those lines. 20,000 years for you to become a millionaire if you have invested £1 into a bank account. So that'll be generations after generations after generations. And today's data, we can see on the order books that this is a screenshot, by the way, that Binance has shorted Bitcoin. I mean, I did say this earlier in my other room that they're going to get liquidated, and apparently they have. And you can also see that BitMEX has shorted, but Bitfinex has long Bitcoin by $2 billion. So the total longs is 4 billion and the shorts are 2 billion. Longs means players in the market who depend on the market to go up. And then the shorts means players in the market who depend on the market going down. And clearly, with the price that's going on, you clearly see who's winning. All right, now we can move on for the CoinGecko charts, and we can find out who are the top participating markets for this 24 hours. So I'm just going to refresh it, and I'm going to go 24 hours. So you can see that XTC network is up 22%, ICP is 12.3% up, Elrond 12%, Helium 11.3%, and Chiliz 11%. And of course, all the other coins, respectively, they're up as well. Now, the coins that are down today is SafeMoon down 7.1, Leo token down 5.4, Theta down 3.6, Tezos down 2.7, and Telecoin down 2.7. And respectfully to all the other coins who are down as well. On-chain metrics today showed that roughly 2 hours ago, they dumped around 2,000 Bitcoin. Now, the market sentiment has changed. They're actually purchasing Bitcoin. So right now on exchanges for today's market, they have purchased up to 57 Bitcoin. So we can see on Coinbase, 102 Bitcoin has been deposited. On Binance, 1,578 Bitcoin has been deposited. But on Bitfinex, Huobi, and OKEX, a cumulative just around 2,000 Bitcoin has been withdrawn from exchanges and put it inside a Ledger or a Nano or Treasure cold wallet device. Good. So now we can move on to the charts. And here we can see the charts on TradingView. By the way, for people who are asking, what am I talking about? Guys, I'm on Zoom. So meeting ID and Zoom passcode is on my bio. If you click on my bio, you can quickly come in. Or you can go on my Twitter account and you see a direct link, which you can see my screen straight away. And it's on the platform Zoom. Okay. So currently, with the price of today on the daily chart, Bitcoin is up. It's above 45,000. Why is 45,000 such a, I don't know, like a mysterious level? You might have heard of it from so many of these other rooms, YouTubers. Guys, okay. So the 45,000 is where the 200 moving average is. So how do I get the 200 moving average? So I go to indicators and strategies. I click on moving averages. I then click on the settings and I change the number to 200. So that's a 200 moving average. And what can you see on the 200 moving average? We are above it. We are officially above the 200 moving average, which is just around 44,964. And right now, the price of Bitcoin, the time of speaking, is $45,705 on the daily chart. So what's next? Well, we know that for certainty that a supply squeeze remains and continues. I'm going to talk more about that later. But what happens in the short time frames? Well, the 200 moving average is one of the biggest resistant lines for any investment, is if that be a stock, if that be a crypto project. You always want to know if something is below the 200 or above the 200. And over here, we can currently just now see that it's above the 200. So what could happen tomorrow or today if it manages to stay above the blue line, which is this one here? If it manages to stay above it, what could happen is that tomorrow it could retest it. So it could drop back down and it could retest it and then carry on its portrayal to go higher. Now, I did explain to my Persian audience that the hashrate indicator did signal a buy. And then 1 month ago, I also did say another indicator signaled a buy. And that is when I activated these laser eyes because we're going up. However, let's look down into the weekly time frame. And I'm going to quickly remove the 200 moving average and re-include the MACD. Now on the MACD, we can see that the histograms are going to turn green very soon. So what does that mean? When was the last time Bitcoin turned green on the MACD? Well, when we look at Bitcoin's history, during the 2019-2018 bear market until now, when it turned green, it rallied. If I get my measurements out correctly, I just want to measure it very correctly. It rallied 2,166% to the upside the moment that the histograms on the MACD went green. Now, I'm not going to say that the moment this turns green, it's going to give you 2,000% gains, but I could say that this is also a reflection of what to be expected. Now, I do know that on the squeeze momentum indicator, that a $10,000 to $15,000 weekly candle is coming, which will take Bitcoin all the way to $57,000 to $60,000 in the very short term. However, from what I just said about a $2,000% increase, I mean, that is a little bit of a fantasy. I mean, if I could plot that for you, what a 2,000% increase would look like, I mean, I don't even think I can do it correctly. Let's see. All right, let's see, a 2,000%. Yeah, I mean, it's going to take you all the way to $1 million, guys. I can't do it. Well, which is quite a fantasy number for now. But however, yeah, it's going to take you to $1 million. If we have the same increase as we did from 27th of January 2020 until the peak of 2021, that is a 2,200 increase. And if the same thing happens, Bitcoin is over $1 million by end of 2022. Obviously, like I said, that is a fantasy number, and past performance does not reflect future performance, but however, we can use it as an indicator about what to expect. And currently, if anything, the only thing that I'm seeing is a $15,000 candle that might happen. And if anything else happens, it's green lights, green open oceans, and we could see Bitcoin turning up to higher levels. Now, moving on, let's go to Ethereum against the USD chart on the Coinbase exchange. Now, Ethereum has 4 weekly green candles. And as you can see on the MACD, starting from Monday next week, we're going to have our first green histogram candle. And we all know what that happens. The last time this happened was a 1,100% increase. And if the same thing happens today, will be a $35,000 Ethereum. Again, that is a fantasy number. It will not happen, not now, of course, but maybe in the considerable foreseeable future. However, for short-term targets on Ethereum, currently we are at a resistance line. I've drawn it, I have wrote it that here in this little line here is a resistance line. However, this resistance line can be broken in 6 days and 13 hours. And after that, the next resistance is the Fibonacci line, which is a 0.618, which is technically, what is the price for it? I mean, I can't see it. It is 0.618, which is $3,381 for Ethereum. And the 786 is roughly around $3,835. So what could happen for Ethereum is that, hey, on the weekly time frame, it could pump all the way here. And then at the top of the bridge, we have the 1.618. So we all know in cryptocurrencies that the 1.618 is like a golden number, right? Regardless of time, it always hits the 1.618. So we know in the future that the 1.618 will be hit, if that be in 2 months, if that be in 3 months, or if that be in 6 months. The target is $6,087. So we know that for sure. However, On the lower time frames on Ethereum, it does say that we are completely overextended. You should be careful if you are in a trade for Ethereum. However, if you purchase spot, I would take a little bit of profits, not all my profits, just a little bit, maybe a 10% withdrawal into dollars, and I would wait for a short-term pullback. Why do I say this? Well, we can clearly see that the RSI, yesterday it was at 81, today it's at 76. Yes, it could extend for a whole 2 weeks above this level, but in no way should you be happy that it's overextended like this, because then what could happen is that if it breaks my RSI level, it could drop. And where would it drop? It will drop all the way to 2,893, which happened today. I did say this is going to happen. But then, of course, it will find support roughly around $2,800. So even if Ethereum does manage to at least hit the 0.618, it will considerably drop by $500 to $800 for the short term. But if you look at high time frames, it has a better future. So yes, I'm looking out for these for Ethereum. It looks completely bullish on the longer time frames, but on the shorter time frames, it is quite bearish, and I would be very careful, especially if I'm going to do a leverage trade. Now let's move on to Cardano, which is our last token, which is on Binance. So first, we're going to look at this on the daily time frame. Now, as you can see, Cardano has made a W, or what you could say Cardano has made is called an Adam and Eve. Now, an Adam and Eve pattern is roughly like this. So, as you know, why is it called an Adam and Eve? Well, if you look down our throats, men usually have an Adam's apple, and the females have an Eve. So they have a curved one, we have a pointy one. That's why it's called an Adam and Eve. And currently, you could say either this is an Adam and Eve, or you could say it's a W. Regardless, the target prices are the same. Now, Cardano has broke its its all-time high resistance. We charted all the way here, all the way down, and it broke it out. Now it's continuing its pattern. So its pattern does say that the target for Cardano is 231, but a more extended pattern is $2.94. Now, currently, Cardano is extending its consolidation period, and it still has a long-term bullish divergence on the daily time frames. Now, from here, Cardano is, of course, consolidating. It is relaxing. It is not doing much, but I would expect if Bitcoin is above the 200 moving average, all the other coins, which are also below the 200 moving average, would then rally on top as well. So overall, in today's market, despite the correction of the CME gap, which is the reason why Bitcoin dumped to 43,000, is to fill out the CME gap. But today also, it means that these other coins will also get above their 200 moving average and continue a rally higher. Now, on-chain data does suggest this. The chart suggests this. The sentiment of the market suggests this. So overall, we are seeing a better chart for the foreseeable future, and of course, in crypto markets. Now, for everyone who is not aware, tomorrow the Senate will be doing the vote. So what is it about? It's about the crypto markets and then this 1 trillion infrastructure bill. But within that infrastructure bill, it's about crypto technologies, proof of stake. They want to know who you are in your DeFi wallets, which is impossible to do, and it slows down productivity and adoption. Now, if you're in America, I would highly suggest you to call your Senate and let them know to not vote for that infrastructure bill, because it will hurt the cryptocurrency industry for America, not for anywhere else around the world, but it's just for America, because everywhere else in the world, they're happy to keep it. They're happy for adoption. Like, for example, Ukraine is very happy to get all those American companies to come down to Ukraine, provide them jobs, get their GDP up, and of course, pump these prices. Anyways, thank you everyone who participated in the Zoom. I will be now going to Clubhouse. Thank you very much.